Good evening and welcome to Capital Connection, where we join the dots to give you the big picture in Africa. I am Fifi Peters. Coming up, our panel of experts discuss the primary and the secondary impacts on African economies resulting from US President Donald Trump's trade wars. In a couple of minutes, we will have an update on Zimbabwe's election, and in our Youth Africa segment, we meet a university student developing a cost-effective solution to deliver clean water to rural communities. And in a report from Lagos, we assess Nigeria's debt. First, let's cross to Maggie Motesi in Kigali for stories making headlines.
Thanks, Fifi. Now, in East Africa, President Donald Trump has withdrawn benefits for Rwanda to export apparel duty-free to the US under the African Growth and Opportunity Act goal. Now, Rwandan apparel exports to the US will now attract tariffs as high as 30%. And in Tanzania, the banking industry has dropped jobs by almost 400 during the period between June last year and June this year, as banks focused on internal consolidation to remain afloat amid declining profits and high levels of non-performing loans. Elsewhere in the Horn of Africa, the National Airways, formerly known as Air Ethiopia, is set to commence 3 commercial flights a week from Addis Ababa in Ethiopia to Mogadishu in Somalia. Now, this is the first commercial flight service between the two countries in 30 years. Very good news from the Horn of Africa in the past couple of months.
America's threats a couple of months ago to suspend Rwanda's duty-free status on its apparel exports are no longer a threat but a reality, aren't they, Maggie? And, you know, what will this mean for the fallout of Rwanda's economy?
Yes, Fifi, there is definitely a huge impact. We're looking at 1.3 million worth of goods affected with a new rule. That's if it's implemented this year. But also locally, about 2 million traders have lost jobs in the sector. However, the government of Rwanda has introduced different incentives to help local textile industries. They don't have to pay taxes on importation of raw materials. Now, this is expected to lower the price of the clothes for the local manufacturers and also for the consumers. But also remember that China just visited the country, and one of the areas discussed was industrialization. So we expect a lot of factories to be set up in Rwanda by the Chinese, which will also be catering for the local consumers and essentially boost the local textile industries. So the ban is really painful in the short term, but the government believes that in the long term, Rwanda will become industrialized. And why not make Rwanda great for once? I mean, one would expect the US to support countries like Rwanda, Uganda, and Kenya and not slap these tariffs, because 400,000 Americans have lost jobs. What about the 3 to 4 million Rwandans who have lost jobs too? So, I mean, it should be a win-win situation for both countries. And I think in this case, Rwanda is taking its stand. The government has just even said to us in one of our shows that they will not change this, but they're looking for more creative ways to support the traders and attracting more investments.
Well, thanks, Maggie. Let's head to Zimbabwe now. Joining us from Harare is analyst Derek Mataisak, a senior researcher with the think tank, the Institute for Security Studies. Derek, thanks so much for your time. Well, as results are pointing very strongly to an overwhelming ZANU-PF win, do you think the numbers that we are seeing so far are an accurate reflection of the will of the Zimbabwean people?
Well, it depends how you define the will of the people. Whether the election was conducted freely or fairly is a moot point. I think it was conducted freely, but was certainly not conducted fairly. And therefore, it's hard to say that this is a genuine reflection of what the people want. But certainly, I think the elections that are coming from, results that are coming from the Electoral Commission reflect the ballots that were put in the box to a large extent, or perhaps entirely, and those will be the official results of this election, and will probably be accepted by most observers.
Accepted to the degree where Zimbabwe moves forward and has a future in which international sanctions are lifted against it, and a future in which lending from major international banks resumes to it, because we do know that this is critical if the economy is to get off the ground.
Yes, the hope is that these elections will now open the way for a new economic path for Zimbabwe, that the understanding is, or the spin from government is, that investors have been waiting in the wings, waiting for the political stability that the post-electoral period is hoped would bring, and that investment will now come into the country and Zimbabwe can start its path to economic recovery.
And I suppose it goes without saying that this is dependent on an opposition party, the MDC, taking these results that they claim are in fact rigged, lying down. In the event that they don't, and we do see violence ensue in that country, what then?
I don't think there'll be endemic violence or violence to any significant extent, and certainly not a prolonged period of violence. If there are any demonstrations or protests by the MDC, I believe these would last a couple of days at the most. They will not be particularly violent. Zimbabwe does not have a history of violent demonstration by the opposition parties, and the small demonstrations that they have tried to mount have often been very quickly suppressed, if I can put it that way. And I suspect that's what will happen going forward after the presidential results are announced.
Well, thanks, Derek, for your time. We will leave it there. Over to Nigeria, Lagos to be specific now. Our reporter, Christy Cole, has been evaluating Nigeria's just released debt sustainability analysis. Christy, the last we heard about Nigeria's debt, the Debt Management Office was talking about listing a Eurobond to finance its 2018 budget deficit. What's the debt sustainability analysis saying?
Nigeria's Debt Management Office carries out the debt sustainability analysis every year. The exercise looks at the country's previous macroeconomic data and then projects measuring the country's level of indebtedness using scenarios ranging from baseline to optimistic best case scenarios to possibly pessimist worst case debt scenarios, and then it suggests how Nigeria should respond in each possible case. What we have done is to have economists break it down into a simple, but what they say is not so simplistic. Nigeria, how is your debt looking? Despite current debt levels, Nigeria has moderate risk of debt distress. That is according to Nigeria's Debt Sustainability Analysis 2017, newly released by the country's Debt Management Office. But the country's debt portfolio remains vulnerable to shakeups in revenue, exports, and currency. What does this mean for borrowing, considering the same office announced it planned to partly finance Nigeria's 2018 budget by issuing a $2.8 billion Eurobond?
The economy is not as simple as it used to be, where all the exports were physical goods. A big chunk of Nigeria's foreign revenue earnings are invisible. And so it's not as bad as it looks on the surface.
The bigger concern is if we have the capacity to sustain that debt. And the focus has to always be about government revenues rather than debt to GDP ratio, which I think can be a bit confusing. If government continues to become very aggressive on tax collections, become very aggressive on generating revenues for the business, I think that the country can still continue to borrow.
While Nigeria may not have breached the stipulated debt threshold, is the current borrowing plan sustainable in the longer term?
If the Nigerian government was to go to the Eurobond market today, they'll pay over 8%. Now, is that a fantastic rate to be owing in foreign currency for 30 years, given the history of devaluation of the currency? Because if you look at the past 10 years, the currency has lost probably 70% of its value. If it keeps doing that every 10 years, then very quickly your foreign debt will be totally unmanageable.
So can we sustain current borrowing levels?
Yeah, you can sustain current borrowing rate levels, yeah. As long as oil remains a relevant commodity and you're selling oil at close to these levels, yes. The amount of money spent servicing foreign debt is very insignificant compared to the exports Nigeria has.
Well, thank you, Christy. Back in Johannesburg now, our Capital Connection correspondent Anazi Zoti met with a university student that is designing a cheap and effective system to provide portable water to rural communities.
So growing up in a place where water has always been a problem. Like, I mean, growing up, you had to wake up in the morning, sometimes very early, and go far to fetch water, and it was quite hard, you know. And like doing chemical engineering, I always hoped that I'd have an opportunity to be able to actually go back home and help my family, help my community, you know. And like, yeah, so when I did a water treatment course, it was a perfect opportunity, you know. I spoke to my professor and he was like, yeah, cool, come, let's talk and let's see how we can move forward. So yeah, Professor Sheridan is pretty cool. I went and spoke to him and we decided to work on this, and yeah, it's been a very interesting and absolutely amazing journey. It's so exciting to do what I actually love, you know. Yeah.
Wow. And you also mentioned looking at developing your research. Mm-hmm. How so? How would you like to develop this research so it reaches communities outside of Johannesburg?
I mean, actually, like, Johannesburg is not even the goal community in a way, because like I said, I grew up in Mpumalanga, in a small village called Bundu, and growing up, it was always a struggle, like I said. So what I'm working on right now is a treatment system that is affordable, where someone who's coming from a place where they don't have money, or like they have minimal resources and things like that, they can still have access to it, you know. And like, I really like to impact their lives by providing them a source of like getting water. Yes, I'm doing research on like how to actually design the system properly such that it can reach the required standard, which is like the SANS South African water standards. And like, they're pretty strict. That's the thing. The standards are pretty strict. But most of the water, especially outside of the metropolitan cities, like your Johannesburg, your Pretoria, your Cape Town, water quality is actually quite bad all around South Africa. It's very low quality. And what I'm trying to do is provide a system where we can get water that is clean, that they can drink at a cost that is minimal, or that does not have recurring costs, you know. And slow central filtration is a system that has very much a lot of potential to do that. So it's quite exciting.
Well, coming up after the break, we discuss Donald Trump's trade wars. Stay with us. Welcome back. The ramifications of the trade war launched on Twitter by US President Donald Trump will leave few, if any, African economies untouched. Our discussion is up next. Well, joining Capital Connection to discuss Trump's trade war is Elize Kruger, a senior economist with NKC African Economies in Johannesburg. We also have economist Ted Kaberuka in Kigali, and in Lagos, political analyst Joe Femi-Dagunro. Let's start with you, Ted. Is Rwanda already feeling the effects of the trade war following the imposition of the tax on its textiles to the US?
Well, Rwanda has started feeling it because, as in international trade, any announcement create speculation and strategies. So right after when the discussion started and the U.S. were threatening to remove Rwanda on the AGOA lists, the government announced that the government will subsidize some export to the U.S. which were under AGOA treaties, and people are the business people are looking forward to it. But the other thing is on the tax on the second-hand clothes, the taxation started like a year ago, and we saw, there is no less and less second clothes coming from the US. So basically, people, in one way or another, they feel that trade war in one way or another.
And Elize, let's bring it here to South Africa. So Rwanda is feeling it. We are also feeling it, particularly in our steel and aluminium sectors, where we have companies that have reported significant losses as a result. Ted made mention of AGOA. How worried should we be that that could be next?
Well, yes, so far the direct impact is only on steel and aluminium. But we have heard that the US is considering to expand, the tariff, import tariffs also to our vehicle industry, particularly motor cars and also vehicle parts, not only the full cars. So that part would be very concerning, given that we do get most of our benefit via AGOA from the vehicle industry. But at this point in time, it's just speculation slash, they're talking about it, but nothing yet announced. So far, the direct impact is still quite small, but we believe that the impact will be more an indirect one via, the impact on Chinese GDP growth and the US, given that they are important trading partners for South Africa.
Sure. And Joe, can we bring you in? Our guests in both East Africa, Southern Africa are concerned about the effects. What is your view on Donald Trump's America First policy and exactly how Africa fits into it?
Yeah, basically, we have to understand the fact that Donald Trump had a promise made to his people, and he's doing his best to fulfill what he said he was going to do. And that should have given us a signal to understand the fact that once you make a promise to your established base, political base, you have to fulfill it. So now what this gentleman is doing, whether we like it or not, is what he has promised his people, the Americans, that he was going to do. So now we have to begin to look at how do we improve in our own continent? How do we improve our governments? How do we improve the economic forecast and the economic situation in Africa generally? The AGOA was a good thing, but it's not something that we should rely on, that is going to be something everlasting. So when it happens, we have to prepare. Now, if you look at it, the impact of what Donald Trump said, or this so-called global trade war, is not something significant here, the way I look at it. And I have not heard a kind of pronouncement from the government on what and how we're going to face that. So basically, I think it's not significant. And we are not going to have a significant effect of it in the long run. It's just a hype, and that is the way I look at it.
All right, this is a very different but comforting view from Nigeria, saying it's just a hype and not a significant impact in the long term. But of course, lady and gentlemen, you will remember that just last week, South Africa hosted the BRICS summit, extending the invite to non-BRICS members, including African countries and countries from Latin America. Everybody pledged support for multilateralism and opposed protectionism that the US has embarked upon. My question to all of you is, in supporting China, invariably by supporting BRICS, are African countries not putting their relationship with the US in jeopardy? Ted, back to you.
Well, I think what the African, especially the East African countries, are struggling to do is to reestablish again the textile industry, because in late 80s, 70s, there was a textile industry growing, but with the coming online of the second-hand businesses, so the textile industry was basically died. So the countries are now restoring, and they put much effort in the investment and job creation within the country. So, you know, with this partnership of BRICS countries, especially China, I think there is hope that there can be more investment toward the textile industry and then increase the productivity of African countries. Instead of relying on importing second-hand clothes, countries can start producing themselves. Actually, something very important people never look at is even the second-hand clothes imported from the US are not made in the US. The majority, the big chunk of them as clothes, they are made from Bangladesh and other countries. So if East African countries can stand on their feet and defend the policy, they can start producing even for the American markets.
Elize, your view on the closer ties BRICS is trying to forge with other nations, including those on the continent, a positive or potentially detriment for their individual relationships with the world's biggest economy?
Well, I think in general we would also rather in South Africa like to promote, trade freedom as opposed to protectionism. And if you look at our trading partner composition, China is the more dominant export and import partner compared to the US. Currently, China is our #1 in terms of our percentage of exports and imports. So US is sort of third. So in that sense, now slightly less dominant, but again, the impact will be globally. So we think that if the trade war escalates to even, bigger sort of proportions and including more sections of the world economy, the impact could cumulatively over 3 years be as much as a 0.7 of the global GDP growth expectations. And that would be negative for commodity markets, which is Africa is very dependent on. It will be very negative for Nigeria that maybe doesn't see it right now. If it escalates, and the oil price is lower than what it should have been, given that there's lower global demand, it will also heavily impact on them. But so I think it's very much in terms of the global impact, the indirect effect that will get to each one of us will be via the global economy.
And Joe, if indeed it turns out that the worries about what global trade war could do to our economies is not hype, and it does in fact materialize as Elize has expressed her concerns about, how then does Nigeria ensure that it protects its economy?
Yeah, basically, we are majorly oil exporting nation, and we are not tied 100% to America, and there's a regulatory body as well, the OPEC, that will do a lot more. And you see that this trade war is not new, affecting our major export products. At the end of the day, what the BRICS is trying to do, which I think is significant, is the fact that we should take the opportunity in Africa to ensure that we take more than just loans here and there. We should use the opportunity to develop our infrastructure. We need infrastructural development. Without it, we cannot have investors coming in to really invest in industries. Because you see, if you go to Mauritius, you see what the airport, the way it has been recently constructed. If you go to Nairobi, you see the railway system, the way it has just been done in collaboration with China. And if you move around the whole African countries, you will see that there are a lot of developments going on. Look at Egypt, the amount of billions of dollars they are investing in trying to bring up a new capital. So I think it's a good thing, but we should not allow this situation to make us to be a dumping ground for a lot of all these other products that will come in. But if it is for the development of our infrastructural projects or our infrastructure generally, I think we need to hold on to that. We need to use that to develop our infrastructure, that we enable investors to come in and build on that. That's number one. Number two, we have to begin to understand that we cannot continue to have deficit trade with all these major allies of Africans. So we have to begin to say, listen, if you have to be trading with us, we cannot continue to have a deficit. You have to trade us on a balanced equity. So this is one of the things what we have to be looking into, that deficit for a long time. Most of our trade relationship with all these major allies are in deficit. So for how long? So if we begin to look at it in the African context and say, look, it's just like the gentleman was saying, if you look at, you can produce textile from Africa. In Ethiopia, they're doing a lot of good stuff there. And so these are the things we have to look. Let's look inward, and rather than looking at the global effect, we are part of the global community though, but what can we gain and how can we improve in Africa?
Well, thanks, Joe. Of course, this is a conversation that will dominate throughout the continent for a very long time as everyone continues to look out for Donald Trump's latest tweet on how he plans to continue to put America first. But we'll leave it there. Thank you to the guests, and that is all we have time for today. But do join us on Monday at 6:30 p.m. Central African Time for more insights on Africa, where we will ask whether it is time to ban plastic bags from the continent. Good night, and I am Fifi Peters.